Here's the whole entire process from start to finish on how to buy a home in 2025. Hey, it's Aaron Page, and today I'm going to break down with you the start to finish, beginning to end process for buying a home in 2025. This is going to be without any of the fluff, any of the stress, and just a downright, this is how you get a good deal, this is how you get it done, and we're not going to be giving you any bad advice leading you in the wrong direction. The first point we're going to make is probably one you're already aware of, that too many buyers jump straight into looking for houses without actually seeing what they can even buy. I've met plenty of people that go out, start looking at homes in the $500,000 to $700,000 range. Then they try to get pre-approved, which they didn't do up front. Find out they only qualify for $350,000. They had their hopes and their dreams up. They saw their family in a home that they went and looked at, and I get to be the one to come in and shatter those dreams because they don't qualify. So, to avoid me doing that in the future to other people, I figured we'd make a start to finish breakdown of how this works. Step one is get pre-approved and also get underwritten. I'm going to tell you that 99% of lenders do not underwrite a file ahead of time. They'll get your application, they'll get your documentation, and they'll review it and say, yep, looks good to go. You're pre-approved for X amount. With me, we do TBD underwrites. TBD stands for to be determined. We actually send in your paperwork to an underwriter, to a person who is an underwriter by trade, and have them review everything so we know exactly how your income is going to be calculated. We know exactly what assets you have on hand, so there's going to be no surprises when it comes to you purchasing your home. Here's another one of the benefits of that. We don't ding your credit. We don't do a hard pull, we do a soft pull. It gives us an idea roughly of where your credit score is, so there could be some variation there, but you don't want to ding your credit, one, because it can affect your score if you pull your credit too many times, but also in 2025, there's a thing called trigger leads. These trigger leads have been around for a while, but if you've tried to get a mortgage and you've had a hard pull done on your credit, the minute your credit is pulled, you are probably bombarded with anywhere from 10 to 40 phone calls for probably the first 72 hours after that happens, and it's the most annoying thing you could probably go through. So we do a soft credit check. It saves you the hassle of that, and you maintain your sanity for at least a couple days. Once we do that, and you provide us your application and your documentation, my team and I break everything down on our side before we send it into an actual underwriter to do a to be determined or TBD underwrite and take a look and put eyes on your file. The other thing we do is we collect the right documents. We're not going to go and collect everything that we may or may not need. We're just going to ask you for the basics that we know we have to have, and we'll let the underwriter tell us what we need to get next. I'm very much a fan of less is more in these scenarios because the more we provide, the more questions that could be asked, and we give them what they need. This is also where we do our deep dive and we find out, are you self-employed? Do you have a lot of write-offs on your tax returns? How creative do we need to get with your financing? Do we need to look at non-traditional financing for you? This is where all of this comes into play on the initial setup before you even go look at homes and make offers. We dial all of this in up front so we know exactly where we're at on your home buying journey. I'll give you a really quick rundown. If you are a W-2 or self-employed borrower and doing traditional financing with conventional FHA, VA, or USDA, here's a rundown of the documents we're going to need. We're going to need for sure your most recent 2 years of tax returns, federal only. We don't need state tax returns. So in this scenario, we would at least need 2022 and 2023 because 2024 tax returns are not due yet, as this video is being made in February of 2025. After April of this year, we will need either a copy of your 2024 tax returns or proof that you filed an extension. At that point, we would still need your 2022 returns and 2023. We will need your last 2 years, which in this case will be 2023 and 2024, W-2s and 1099s. Those have been issued. They were due to be issued by your previous or current employer by the end of January, so you will have those on hand and you will have to provide those. We also will need your last 30 days of pay stubs if you're a W-2 hourly employee or salary. We don't need any more, we don't need any less, but we do need 30 days. It can't be 28 days, it has to be 30-day coverage of pay stubs. Lastly, we need 2 months of bank statements or wherever you're going to be pulling money for your closing costs and your down payment. So that can be a 401k, it could be a checking, a savings, a liquid investment account. Wherever you're going to be using funds for this transaction, we need 2 months of statements or the most recently quarterly statement if it only cuts 4 times a year to show where your funds are. There's a longer explanation to this very quick rundown. Last 2 years of filed federal tax returns, last 2 years of W-2s or 1099s, last 30 days of pay stubs, not 28, not 35, 30, and your most recent 2 months of bank statements or quarterly statement where your funds to close are coming from. After you provided that documentation and done your application, I will have you fully pre-approved, or unfortunately, I'll have you fully denied as well. This is where we do 99% of our work to make sure everything is dialed in and we know exactly where you're at on your home buying journey. Once you've completed that, we move into step 2 of the home buying process, which is finding the right real estate agent. Not just any old real estate agent, the right one for you. Most people, when they're buying a home, they go off who their friends and family recommend. It's someone that maybe their aunt's sister's cousin has her license and she's a great lady, so you should use her. It's a huge mistake. You need to find somebody who works well for you and is available when you are available. I have 3 main pieces of advice on this when it comes to real estate agents, but I'm not going to dive in it too much because I'm not a real estate agent. I'm just going to give you what I've seen over the last 14 years of my career and what you should expect. Realtors, when they don't typically market just a blanket area. For me, I'm wearing a Coeur d'Alene, Idaho hat. That's where I live. A lot of realtors market Coeur d'Alene as a whole, but if you're looking to move into a certain neighborhood, a lot of realtors will specifically market certain areas and they know the areas inside and out. There's a neighborhood in Coeur d'Alene, ironically called Coeur d'Alene Place, and it's one of the biggest neighborhoods in the area. But parts of Coeur d'Alene Place are nicer than other parts of Coeur d'Alene Place because the neighborhood is gigantic. I would look into realtors that are marketing that area because they've done the research in that area. They know what homes are going to have value, or maybe say, hey, you have some kids and this street's kind of loud and there's always cars parked on the side of the street, which makes visibility tough if a car's driving through and your kids play outside. You need something that's a little quieter. They know the areas of the neighborhoods. So I personally would find someone in the area who markets that area and just interview them, which leads me to my next point. I would recommend, just like with your lending, you always get multiple opinions. Interview multiple lenders for your financing. And that goes in conjunction with interviewing multiple real estate agents to see who fits well with what you're trying to do. This isn't to be offensive or stereotypical, but if I find a realtor who's been a realtor out here in Coeur d'Alene for 50 years and they're not up on technology, I'm in my 30s. If they're in their 70s and they don't want to do anything when it comes to technology or anything like that, I'm not interested in working with them. Even though they know the area, that's where they market, that's where they make their business and they make their money. I'm not interested in dealing with someone who can't be on the same level and speed that I'm at. So even though they may know the area, I'm going to find somebody that I work better with and give them a shot. But I'm going to do my research and interview multiple agents to figure out who's going to work best for me and the speed that I want to operate on my home purchase. The last piece on this one is make sure they understand your goals and they truly understand them. If I say for my family, I need to have a 4-bed, 3-bath, 2-level home with a garage with extra storage. Those are the main pieces for me on my takeaway, and I need to be at least 2,500 square feet. I don't want to be looking at a 3-bed, 2-bath, 1,600 square foot rancher that's 4.5 miles away from where my kids go to school. I don't want to see it. I don't even want you to send it to me. So I need to make sure that my agent understands what I'm looking for and only shows me maybe a little bit of discrepancy. But if I know what I'm looking for, that's what I want to see. Don't send me ones that have higher comp for you or, oh, hey, this is a nice area. A 3-bed, 2-bath won't work for me. Don't send it to me. So you have to make sure you work with an agent that understands your goals and isn't just going to shotgun send you a bunch of listings and say, what do you think? It's just wasting your time. Step 3 of the process, once you've got your lending in place and you've identified a realtor you want to work with, is to go house hunting, but do it the right way. The biggest piece on this one is to stick to your budget. Buying real estate is emotional because when you go out and you look at different homes and listings, you can see yourself living there if it's the right place. And then once you've identified that, you start to get emotionally tied to it of, I can see my family here. I would change this. I would change that. I'm going to have to do this in the future. And you start picturing all of this, and then you don't get the house. So then is what happens. A lot of people say, well, let's just go look at one that's right next door. It's only $40,000 more, but I like the area. Well, now at that point, you're up $40,000 on your budget, and you're getting into a realm you don't really want to be in when you started this search. This is probably my favorite tip ever, and it's you do expect to be catfished. And as what I mean by that is photographers are really good at what they do. So you're going to see a listing online and be like, wow, that house looks incredible. And you're going to get there and you're going to be like, this is not even the same house I saw online. Photos online, just like with people, can be very misleading. That room that you may think is gigantic could be the smallest 8x8 you've ever seen, and the photo's taken with a fisheye lens and it makes it look like it's just a massive living room. Turns out you can't even get a sectional couch in there. So don't get too high of hopes based on a listing and seeing photos online. The last piece when it comes to house hunting is you have to be ready to act fast. A good home doesn't sit on the market and doesn't last long. I'm talking a couple days if it's priced right and it's in a nice neighborhood that multiple people are looking at. It's not going to last and you need to be ready to go quick. And is what I do mean by that is if you are serious about buying a home and it's in a neighborhood you want to be in and it fits your characteristics, you do need to go see it on your lunch break from work. You need to prioritize it because even waiting from noon until 5 p.m. could be the difference of someone writing an offer and now you're in backup position and you just missed out on your dream house. Once you've identified a house, you move into the next step, which is actually making your offer on the home. Now it's time for your realtor to negotiate for you. The first question I would ask when you're ready to write your offer is ask your agent, do you think this house is going to comp out? If the house is $500,000, but all the other houses on the block are $400,000, what's making this house $100,000 more than the house that's 3 down that's the same layout or maybe slightly different layout, but same characteristics of bedrooms, bath, lot size, and square footage? Another step on negotiating is you need to think about your closing costs and what that's going to cost, which is where you'd have to talk to me as your lender. And I would say, hey, your closing costs are going to be 1%, 2%, 3%, whatever the scenario is that's best for you and how we need to adapt. We need to know what those closing costs are because a lot of times and in a lot of markets, the sellers will pay the closing costs if your realtor asks them to. So if you come to me on a $500,000 purchase and I say your closing costs are going to be $7,500, your agent may want to write in and ask if the seller will pay the $7,500 in closing costs or up to that number to offset some of your out-of-pocket costs when buying a home. The last piece on this one with making an offer, something I always do, when I have a client who writes an offer with their agent and it's submitted, I will figure out who that listing agent is who's representing the sellers and I will call them myself. When I call them, I talk about all the work we did in step 1, where I already have you underwritten. I already have eyes on your file by an actual underwriter where we're going to be sending the file. You've already been approved on a TBD approval. I've already looked at your credit. I've seen your documentation myself. And I let them know, hey, in this market where there may be some uncertainty, there is not an uncertainty here. I have an approval on this file. As long as the property appraises for the value, this client is good to go. That also ties in with we're not waiting on down payment. I've seen they have the money. We're not waiting to prove their income. I've already had it proven. So when I call the listing agent, it goes a long ways in conjunction with a strong letter from your agent, and maybe even you write a letter to the sellers to explain to them how important this house would be to you. It's the neighborhood by your kids' school. You can see your kids growing up here, or maybe you want to start a family here. All of this ties in to be one big collective offer, and it goes a long way if you package everything correctly and you have a team willing to do that for you. Now, they accept your offer. We're into step 5, which is the loan process and the inspections that you have to go through throughout the home buying process. The minute you go under contract, unless it's 9 p.m. at night, chances are I'm going to call you the next morning. But let's say you go under contract at 11 o'clock. Right after I receive it from your realtor, I'm going to call you and go over loan programs again, interest rates and what they've done, because interest rates can change by the minute. Honestly, they can. So if I pre-approved you 3 days ago and let's say your rate is X, they might be X% better today, or they could also be X% worse. That's a conversation we have to have, and we have to do it up front. We have to do it early. While you and I are talking loans and rates and locking in everything, your agent is actually going to be ordering behind the scenes your home inspection. These can range depending on the size of the house in the area. I've seen them as low as $350. I've seen them as high as $900. If you're buying a massive home that's 4, 5, 6,000 square feet, it's going to take a home inspector the better part of 6, 7 hours. So when you have an expectation like that, you're probably looking at the higher end there of $700, $800 for a home inspection, maybe even more. I'm not a home inspector, so I can't speak to how they make their money, but I know the bigger homes cost more money, just like in everything real estate. My personal recommendation, a home inspection is optional, but I would never ever skip a home inspection. You find out more on a home inspection than you do on an appraisal, and a lot of people don't know that. The home inspector goes as far as getting in the attic or the crawl space or whatever there is. They test the electrical outlets. They look at the electrical panel. They do everything that an appraiser would do, but they do it on steroids essentially, and they do it 50 times more thorough. It's up to you if you want to skip it. I would never skip it. Once you've cleared the inspection, you're not going to go back and negotiate anything. Maybe the inspection's perfect, or there's a couple little things here and there that you'll fix on your own, and we get the okay from your agent. We order your appraisal. All of this is happening while we get your disclosures out, we get your underwritten finalized, and we get you all your paperwork. Once we get the okay, we order the appraisal, which is really the last main hurdle to make sure the home comes in an as is condition, is what we call it, and at value or the purchase price. Once we've done all of that, the appraisal is in. Since we underwrote your file in the very beginning, there shouldn't be too much to tackle here that we haven't already done. The appraisal comes in, it's at value, it's in as is condition, the underwriter reviews it and signs off, and your loan then moves to clear to close. Is what clear to close means is we're clear to close your loan. We're moving straight into the final closing stages. You get your final loan approval, we get your closing documents out, and this is where the title and escrow company will call you to come sign in person to finalize the loan that we put into place that we've been working on for the last 30 days with you. At this time, when you go to sign your closing documents, that's when you bring in your down payment and your closing costs. Some people choose to literally bring it in where they get a cashier's check. You can't do cash, you can't do a personal check. It has to be a cashier's check, or is what mostly happens is they wire the money straight to escrow. Not everybody feels comfortable picking up a $30,000 check and walking into a place with it. Once you've brought your down payment in, you've signed your closing docs. Depending on what time you sign, if it's early enough, you'll fund the same day, which means you'll sign, you'll fund, and it will record with the county, which means when it records with the county, it's in your name and you own it. Some states require a day's wait, so sometimes you have to sign today and fund tomorrow. I've even had some states where you sign today, fund tomorrow, record the next day. So that's very specific to your state, but most of them, like I'm in Idaho, is a sign, fund, record same exact day, no delays. If you can get the money there after signing and my team can fund it in time before the recording cutoff, it'll record with the county that day, and as of 5 o'clock that day, or when it does record, you own it. Just like that, once we check all those boxes and it's recorded, you're a homeowner. My final thoughts on all of this is you just have to remember buying a home doesn't have to be stressful. It doesn't need to be overwhelming. It doesn't need to feel unobtainable. There are plenty of loan programs out there with little to no down payment. There are great realtors, there are great lenders, and you need to find all of that together. If you can find a great lender who will underwrite your file up front, you shouldn't have any surprises when it comes to your lending. If you can find an agent up front who identifies your needs and listens to you and finds you the right home in conjunction with your lender with the right lending program, because they do everything up front, you should have as close to a flawless and seamless lending and buying a home transaction that you possibly could have. The only unknown variable would be the appraisal, and nobody really knows that up front. But if you have an agent who does comps and says, we shouldn't have any issues with this house, you should, in theory, have a completely stress-free home buying process. I want to thank you guys for watching today. As always, thanks for being here. Subscribe to the channel. Make sure you follow it. Share this with anybody who you think may find this information helpful, and we'll see you on the next one.